since morning. We were getting a lot of calls since morning about what is our view on the evolving situation. So while we were kind of communicating, but we thought let's get all of you and discuss this. And I would love to make it interactive. So please, either through the course of this call or post my initial comments, please feel free to ask any questions or put your comment or suggestions. Because that way I will be able to address, at least share my view on some of your queries. So, what I last 3 days have been, I think anybody who had a view was right and wrong both, right? So, just 3 days ago, market was 22,500, the close before the election exit poll was 22,500 Nifty, and we saw is jumping up and again when the results came out. So this is what makes it, I think, very, very interesting. Markets are always, or markets or, things always throw surprise. I always said, whenever people ask me, what are the risk factor you say? And I say risk always comes from unknown, what we don't expect. And this is what this time also happened. The exit poll surprised everyone. There was a short covering. And then, election outcome, what we saw, it was what it was. So, and then since yesterday, lots of speculations, who will make government, what kind of negotiation will happen. So all those things are kind of, I think, there on investors' mind. The way we think about it, I think, post especially the Prime Minister's address yesterday, and sort of connecting a little bit of dots, and it's kind of very clear that NDA will form the government with 290 plus seat, and two critical component, the constituents of NDA are TDP and Janata Dal United, which is basically people are guessing what will they do, and while TDP has publicly expressed their commitment. I'm told even JDU also has said that, but I'm not very sure on that. But TDP has publicly expressed their commitment to NDA, be part of the NDA. And if I were to also understand from their point of view, I think Chandrababu Naidu would be more interested in running the state and have the complete handle on the state rather than getting, let's say, if you were to defect and go to India Alliance, there probably you will have be a part of an uncertain or unstable government. So I would say from his point of view, the sheer vested interest point of view, it makes sense for him to continue to be part of NDA and negotiate a large package in ministry at the central level. I would assume that way that must be ongoing. And same thing probably I would assume that JDU would be doing. But even if for a moment I assume JDU, which is slightly unreliable partner as compared to TDP, as we have seen in the past, even if JDU is not part of it, they only have 12 seats. So it is very clear that I think President will invite, Mr. Modi to form the government, and then unless somebody brings no confidence motion, or they will be able to kind of manage the majority. It's not a very hard task to do that. And that basically also one of the things which is very, very clear from the speech of Prime Minister yesterday, that they will continue the reform agenda. And for a moment, even if I am, while he said that they will also take tough decisions, but even if I for a moment assume that the tough decisions are not to be taken, let's say what would they would have wanted to do. I mean, there are a few things, whether it was farm laws to land reforms to UCC, or one nation one election, some of the three four potential reforms which probably we were expecting, if they got the clear majority, they would have carried out. Even if these reforms don't get carried out, it is not changing the growth trajectory of life of a country. Of course, it would have been better, but it's like India has done reasonably well in last 3 4 years or 5 years without even those reforms. Which if that happens, great. But if it is not, that life is coming to an end. So I think assuming even if those reforms are not being carried out, even if this government continues more of the same, then what does the scenario look like? How does one understand the sort of growth trajectory, economic trajectory from here? And our view is that even if more of same, what this government was doing primarily in recent past was spending a lot more money on infrastructure, creating a lot of focus on manufacturing policies around that. That was, and along with that, of course, factors like China plus one also was helping and contributing the demand. But government was creating a little bit of enabling policies around that. Government was spending reasonably good amount on welfare through free food, and also some sort of direct credit, direct benefit transfer to people's account. right? So those things were continuing, and maybe this situation might force government to do a little bit more welfareism, right? Which, while jury is still out, I think one can't really say for that for sure that government will go on that trajectory. But even if, for argument's sake, one assumes that government will go more towards on welfareism, you know, currently India has lots of fiscal space to do that because our tax collections have been reasonably buoyant and that continues to remain reasonably on a good growth trajectory. So my own view is that we aren't likely to see any derailment of the current growth trajectory because the current growth trajectory has multiple levers. And one of the big lever which is infrastructure spending. Now, one argument some people have been making that if government spends more on welfare, will infrastructure spending cut down? And my answer to that is that maybe not, because if you see a lot of infrastructure funding which is happening today is not happening through the fiscal deficit or through the budgetary resources. A lot of things is happening through the pay per use model, in the sense like if they are building airports, it is obviously coming from the based on the user fee basis. If you are building highways, it is coming from there. If they are building railways, so all of them are a lot of infrastructure spending, whether it is metro, they are apart from some viability gap funding, which is also not a very large amount. I think it's also based on the SPV and those self-funded model. So they are not necessarily very big way dependent on the fiscal support of the government. And I think government can continue to spend and invest on the infrastructure side. So I do not see. In fact, government understands that more they spend on infrastructure, it is good for the tax collection, it is good for the job creation, it is good for the overall economy. And this government understands really well. So I would say, if at all, they probably would step up rather than stepping it down. Is my own hypothesis. So that is a good news. Second big driver of the growth has been, of course, lots of activity pick up in the manufacturing side and all those things. Capex cycle has picked up after a very long period of time. I again do not see very significant change happening in that cycle. Lots of projects have been continuing. To give an idea, I mean, even some of the traditional investing, large capex industries like power and steel are beginning to see, new capexes coming about. Power segment, other than the renewable, which has been anyway in a good swing, but even the conventional power, there has been lots of ordering of new plants. I think about 30 or 40 odd gigawatts. The plants were, has been placed in order because, as the Indian economy is growing on all fronts, there is expected shortage of the power, and renewable cannot meet the peak demand. And hence, you need to build nuclear capacity, nuclear power capacity. You need to build thermal power capacity, and that capacity build out is not changing because NTPC is building that. So some of the private players are building that. That isn't changing, right? So that's part of the plan. Even if tomorrow some other government were to come, that will happen, right? So those things I don't think are getting derailed and all those things. The way we are thinking is that probably continuation of this government with slightly less majority, probably in some sense might be also a little bit good, because one of the hypotheses or one of the key complaints against the government was of the bit of arrogance, bit of the high-headed attitude. And if let's say this probably situation might kind of put government a little bit in check. And the example probably I like to give is that UPA 1 versus UPA 2. In UPA 1, government was in check, because they were part of a coalition, they were still all right, corruption was limited. And UPA 2, when they got the absolute majority or, clear majority, things changed significantly when they were not dependent on left and they had a sizable numbers for them. So same thing probably, sometimes having a little bit of a check uh, 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 governance, especially given recent feedback which has come from all over the place, probably might be a good situation from the government's from an overall ecosystem or environment perspective. So the way we think, this is how political situations is evolving. Uh, of course, a lot of debates are, or a lot of questions are being raised, how the ministry allocation will happen. I mean, we have no idea, but I would assuming that one or two important ministries were to go out, some of the coalition partners, I'm sure, the broad framework, direction will not change, because even those people may be also well-meaning people. And I'm sure, Mr. Modi, even if, he will not be prime minister, which will give complete free hand to, indulge into whatever activity, like how Manmohan Singh did for telecom and all those things. So I think those kind of worry and situation, at least we would like to believe, are not there. So this is our overall assessment of the of the situation on the political front. And whether I don't know whether it is confirmed or not, but I think I was just reading some messages going around that government formation or prime minister is likely to swear in on 8th of June, which is 3 days from now. So I think once that happens, lots of I think concerns, lots of worries probably will be more behind. I think a day or two today, as the day has progressed, I think concerns have been kind of behind, or concerns have been kind of ebbing. So in that sense, I think it's very clear that I think markets will stabilize. And another way to think is 3 days ago markets were around these levels. Today markets are at these levels. Another interesting thing has happened. Lots of stocks have corrected in this period, and many stocks 20-30% got corrected, especially some of the frothy ones, which is a good news. PSU banks and PSU stocks have corrected. Again, one of the hypotheses people believe that PSUs might not do as well. My own view is that it's probably too early to call in. Um, uh, I don't think PSU divestment was anyway big agenda of the government. They never kind of clearly focused on divestment in last many years. PSU turnaround, PSU enablement, PSU putting back on the growth plan was definitely on the agenda, whether you look at banks or you look at defense PSUs, or for that matter, power PSUs. I think, lots of focus was there to bringing back the growth and using them to kind of building the infrastructure. So I think that would probably continue. I don't think anything meaningfully changes on those front. And to that extent, we think that some of the specific, again, I can't broad brush saying that all PSUs, but specifically PSUs which we like, I think should be okay. So I think broadly, net, I think this is our assessment or summary of the situation. One might worry about potential, and it might happen for some more time, about the FI flows, how there was a stability premium, or clear majority premium, so to say, which people were saying that India is getting a premium because continuity, stability, which to some extent can get questioned at this point in time. Well, nobody knows the answer. But to me, currently looks like the government is going to be stable. They are going to complete 5 years. How bold or how empowered they would be, that we'll only know in the fullness of time. So to some extent, people are believing that flows might not come in. But my own view on that again is, uh, large part of the flow is also dependent on the Fed interest rate cycle. Despite all the continuation of the government in last couple of years, we have been seeing outflows. So it's not necessarily only linked to the local issues. Also, because if you see historically, whenever Fed increases interest rates, money moved out of emerging markets, and so did happen this time. I think post uh, COVID, after as Fed started raising rates, we saw so much. I mean, so it's about 40-45 billion of outflow happening from India. And same thing had happened in 2012-13 period, that when India became part of Fragile Five, taper tantrums happened. Same thing happened even in previous situations whenever Fed raises interest rates. And that same money towards emerging markets come back when Fed starts cutting rate. So my own view is that you will see the good inflow of money coming from more because of the global interest rate cycle than really the domestic issue. Of course, India has been receiving within the limited pie of emerging market flows a slightly larger flow than compared to other markets like China and all. India has gained from that. Overall pie will grow, and that only will bring incremental flows, according to me. India still will be seen. And I think this election related news to maybe budget probably will be a little bit more heated discussion, and then I guess we will go back to the normalcy, and markets will go back to fundamentals, earning growth, usual stuff what we do. So this is, I think, at least we think how markets are going to play out. This is how we are thinking. In terms of sectoral prices, nothing majorly changes, because we never anyway were part of any of the Fed or so-called most chased after sort of sectors. I mean, we never, in the recent past, we kind of paired most of our defense and, railways and all those things. We find them a little bit frothy. So we've not been there. But generally speaking, we continue to maintain our overweight stance on banking, financial services. We continue to maintain our overweight stance on, sectors like manufacturing, especially chemicals. We've been buying lots of chemicals in the last 5-6 months, which has not done well, but I'm sure, we'll be a little bit contra on that. It's been kind of flattish. Uh, we've been in last 5 years we never bought consumption stocks, but in last 2 3 months we've been beginning to buy consumer stocks. We've been finding good interesting ideas at a reasonable valuation, so we've been kind of adding first time in our funds consumption stocks. So that I think is one change probably from the past. We think that consumption will pick up, premiumization will happen, and the risk reward of valuations is beginning to come closer to the favorable framework. Not across the board, but we kind of look at the ideas where we are comfortable with. So that's something we are doing. Within IT, again, so most of the time we've been playing through mid cap IT, and large cap IT saw quite a bit of correction and consolidation. There also we've added few players in the recent past. We are still slightly underweight IT, but we like IT, from medium term to long term perspective, because and especially some of the mid cap IT names, we've been quite positive. CapEx cycle, we are continuing to remain invested. We don't think anything changing in that and materially. And so we are continuing to sort of, holding on to that. So major change perspective, I can only say consumption we've added in last couple. It's not because of any election we are changing. We added last couple of months. In And maybe a little bit of quick update I can give you. Bharat Amrit Kal Fund, as most of you know, that we launched only last month, and we've been raising for capital raising mode. We had done our fourth closing on 31st May. So whatever money came, we were sitting on cash. Of course, when the exit poll came, we were cash on sitting on cash with the huge stock index going up, and we were kind of sitting on cash. But yesterday we deployed some capital. Today we deployed some capital. We are still sitting on some dry powder, which we will sort of deploy. Uh, um, so again, I would say I would probably close and summarize some of the, I will probably maybe share some of the sort of names as well. But maybe the way I would like to summarize is that, wealth creation, we all know, is a long-term cycle, long-term process. These kind of things will come. Our view on India is not changing materially at all. And I like, again, during the course of Bharat Amrit Kal Fund, what I have said, that one of the trend which is irreversible for India is our young demography. We are 28 years of age, two-thirds of our population is working age population. More than 50% of our population is below age of 25 years old, right? Same thing is not working for any country in the world. I mean, whether it's China, Europe, and this trend itself creates lots of productivity, itself creates lots of demand for Indian products. And that I think is a very, very big trend, and that we are seeing reflecting in outsourcing of office space, GCCs. We are seeing outsourcing of manufactured goods, and combined with all these things, we are also having additional incremental levers of infrastructure and all those things. So all those drivers of the growth which we've been talked about does not change with the current change in the political landscape of India as we speak. So I would all say that one needs to be kind of fairly long term comfortable. Of course, if some rumors develop, some things might kind of change. But I don't envisage a scenario where markets can see a deep cut. And maybe final word on the risks part, I want to tell you. I mean, historically, if you see in last 20, 30, 40 years of any time in India history, risk has come only from five factors. Whatever, if you see, one is current account deficit. Whenever India, current account deficit is, we import more, export less. So whenever India overshot its current account deficit, it always put pressure on its, currency and thereby inflation. So 2012, when we became part of Fragile Five, our current account deficit went to 4%, and currency had to be depreciated by 20%. Rajan had to do that emergency bond at a high cost. So whenever that happens, I think that's a very big risk. Today, our current account deficit has come down from 4% to 1% and looking only better. Our view has been, which we outlined in past calls also, that we are moving from current account deficit to current account surplus in next 5 6 years time. So to that extent, that looks very, very good. And could you ever imagine the situation when US has raised interest rates by 5%, and Indian inflation, Indian currency does not change? Or manage. It is because of this current account deficit, because you don't need money from others. Your current account deficit is always funded by capital flows. So your current account deficit is today in very good place. Second one is fiscal deficit. Again, whenever fiscal deficit goes out of hand, it puts pressure on the interest rates and thereby inflation and so on and so forth. Today, our fiscal deficit, we all know, is one of the best managed around, and we saw recently how the fiscal deficit budget versus revised estimates came down with RBI dividend and PSU bank dividend, and tax collection we see has been rising significantly. So I think I see that also being managed, and I, given the track record of the government and Mr. Modi, has always been very fiscally responsible. I don't think that changing, back to anything worse. Some amount of tweaking might have been done, but I don't think it will change. Just to give an idea, UP became revenue surplus state. So I think NDU has a core philosophy to kind of manage fiscal very well. Thirdly, if you see, risk always has come historically whenever our banking system has got weak, because of some, either NPA issue, whether it was in 2001 to 2012, 13, 14 period. So whenever NPAs goes out of hand, it creates problem at economy and markets level. Today our banking system is very, very clean. If you see, well provided for, well capitalized, well digitized. Historically we never had IBC, we never had a very strong CIBIL scorecard. Today banks do assessment of the risk by taking data from GST and income tax. They don't ask customers to give you. So there are lots of, enablement has happened, which will not bring the issues of the past of fraud or cheating and, defraudment in the banking system. So I think it's far better than what it was before. And I can say, whatever little I understanding, Indian banking system is one of the best place in the world. Today, even US can't claim that kind of cleanliness and enablement of the system. China, of course, we all know that it can't be trusted on the banking system and the quality of the asset. So I think India's banking system is very well in place. Fourth, inflation. Again, whenever inflation goes out of hand, it kind of creates lots of problem. So India has managed it very well through the COVID, including import of Russia. So our inflation is very much in a very, very tolerable level. And which I don't see anything changing anytime in a hurry on that is front. And lastly, our debt to GDP or corporate debt to GDP. Again, in system always leverage brings huge amount of risk. Today, as we see, our corporate debt to GDP or our debt to GDP overall also is one of the lowest, around 78, 79%. We are the only country whose debt to GDP has come down from financial crisis, right? That's again a very big sort of strength for us. So I would say that, our debt to GDP is very good. Our corporate are not levered. So risk again comes from leverage, right? Most corporate, I mean, I don't know any corporate who's overly leveraged. In fact, they're under levered. So entire credit cycle is ahead of us, and that leverage cycle is ahead of us. So our household debt to GDP is again very, very low. So if you see the historical fault lines of Indian economy, Indian markets are only these five. And these fives have been, are in a very good shape or good pink of the health. So the way I always say that risk might come tomorrow, if our body is there, viral attack might happen. But if our vital statistics are good, if our health parameters are good, we will withstand those and we will not succumb to those viral attacks. Same way happens to economy. Risk will come. It always comes unannounced. It always comes from the sources we don't expect. The only thing which gives you comfort is that today you are far more better placed from your ability to withstand risk and overcome that risk. So to that extent, I think India is in a good shape. Our hypothesis of Bharat Amrit Kal does not change. I think India is in a very good growth trajectory. We will continue to see that playing out. So I all wanted to kind of probably before I invite questions from you, all I just wanted to kind of from my side say that India is in reasonably good shape. I don't think anything materially is changing. Yes, markets might consolidate, which I always believe is a good thing. Market should, if market goes up one way fast, it always creates short-term risks in the system. So orderly or movement of market is always good. So I'm in that sense, if market consolidates over the next couple of months, could be very good in that sense and would be good opportunity to deploy capital. I don't see market, in a normal situation, give or take any exigency or any, unexpected risk coming. I don't see Nifty breaking 21,000 kind of level is my own assessment. So probably I will pause here and, ask open, for questions. Please raise your hand. You can put on chat or, whichever way you're comfortable.
Participant can unmute themselves and ask questions as well, or either they can drop a question on the chat box.
Hi, Vikas, this is Akshay here from Golden Mirror. I just wanted to check, do you have a view on, how much time it will take for the markets to sort of recover, go back to, let's say the levels that they saw on Monday? If there is a view around that, which stocks would lead that? If you can give us, some kind of guidance on that, I'll be really grateful.
Frankly, actually, I don't have any short-term view on the market, and I don't intend to. I mean, I don't think that even materially matters from the, especially from the activity perspective. What we do, I think we are in a process of long wealth creation from a long-term perspective. I don't think whether it goes 22. This we are talking only about 1,000 points away from here. So whether that goes next month or 3 months later, as far as we are concerned, makes no impact to us because ultimately we invest into companies. Some of the sectors, like I said, that first time we are finding good interest in consumer, we will continue to look for ideas in that. I mean, India is one of the most broad-based market from a opportunity perspective. I think today, if a banking is looking to do well, consumption is looking to do well, infrastructure is looking to do well, manufacturing is looking to do well. Within manufacturing, there are so many spaces: auto component, chemicals, defense, garmenting, EMS. So I think India is very broad-based opportunity. And very often, in fact, I always say that, you got to choose, make different difficult choices. So I would say approach from that perspective.
Okay, hello,
Thank
Mr.
you.
Khemani. This is Nidhi. I
Yes,
have a
Nidhi.
question on banking since you like banking very much. So, because there is a part of your portfolio, but the banking, what I'm seeing, the most of the banks they are facing a lot of challenges to, for the deposit growth. And as long as they do not have the deposit rate growth, obviously they how they are going to be lend the money. And in your presentation, you just have said that most of the companies are not leveraging. Even nobody wants to take the loan, and most of the people they want to come through the equity side. So, and knowing the entire, since we are a distributor and we make the allocation in the mutual fund everywhere, the banking is the favorite sector for everybody wherever we are seeing banking. So some think, and we ourselves are not very much comfortable with banking, so please put some light on that.
Absolutely. No, it's a very valid point that less deposit growth, high credit growth is a challenge for the banking sector. That's the reason if you are seeing, there is a bit of a pressure on banks' cost of funding, and there's a NIM pressure is happening. If you see, most of the banks have reduced their NIMs by 10, 15, 20 basis point, depending on which bank we're talking about. So I think that's a concern from a short-term perspective, and that also partly get exaggerated because I think there's a unduly high tax on the fixed deposits. You pay almost maximum marginal rate is 40%. And that is also kind of channelizing money away from fixed income to equities. Uh, so I think that probably is one of the big concern on banking. But the only thing I would say is that as long as economic activity in the country is growing, banks will be able to raise interest rates and pass on that interest rates. And right, and I think what we are talking about 20, 30, 40 basis point of kind of interest rates, which is easy to be passed on, and that won't have a major impact on the project viability of any sort of company or any but this is a concern, and as a result of that, if you see, in within our banking exposure, we have gone more towards, like, we have insurance in our portfolio. We have got some AMC in our portfolio. So the way we look at BFSI, some point in time we had only credit. Today we have a slightly more balanced portfolio from credit to non-credit, right? Also in your portfolio. So that is how you kind of play. But having said that, credit is, to give just one number, India's total credit, you know, is today $2.5 trillion, right? This number, by 2047 is expected to go anywhere between 65 to $70 trillion, right? So if this is the kind of growth, and this number, by the way, of $2.5 trillion was $125 billion in 2001 two. So in last 20 years, it moved from 125 billion to $2.5 trillion. And in this period, we have seen all kind of cycles, interest rates up and down, and it has created massive wealth for the banking sector. So we should not keep, it's like we cannot, overall macro picture, we cannot lose out of the growth in the process of a short-term industry aberration or challenges which we are having. So you can keep tweaking your weights up and down, keeping in mind the short-termist approach. But having said that, I have no doubt in my mind that banking will be a great opportunity from a medium-term to long-term perspective.
Hello.
Yes.
Hi, Mr. Khemani. Thanks for a wonderful session in current times. I'm calling from Pune, right? Just wanted to understand that when you mentioned about the cash exposures in the portfolio, right? So do you suggest that when we do not have individual opportunities in stocks, let's say in such times, do you suggest having an exposure through some ETF or some market ETF, okay, and minimize the cash drag on the portfolio? Do you see it as a good strategy to go for
Yes,
until you get,
absolutely.
yeah?
Absolutely. If one does not know the stock, at least remain invested into the index is what, that absolutely no problem with that.
Okay, thanks for that. Thanks for that. Good day.
I think there's somebody has raised their hand. I can't know the name, but if yeah.
Hi, hi, Vikas. Just wanted to check the last 2 days, the kind of correction that we've seen. Are you deploying some of your money into power sector, or are you still holding on to cash for some more time? Thank you.
No, we have, like I was saying, we have deployed in some of the companies we identified where we found risk reward was very good. Power sector we could not or we did not buy still. While we think we are still evaluating, one or two companies should we take or not. But we have definitely deployed capital in last 2 days, today and yesterday.
If you could specify the sectors which you are deploying your capital into, that would be great information.
Like I said that we bought in infrastructure space. We bought companies like GMR Airport, which we think are very very interesting, structurally speaking, great stories. So we bought that. We bought Container Corporation of India. We bought companies like SRF. We bought companies like Dabur. We bought some of the company consumer name companies we bought. So I mean. So we bought, across wherever our space is there. So like in consumption, in infrastructure space, in the banking space, we bought a few names where we wanted to buy. We're still buying, so that continues. So across the board, wherever our comfort has been there, we've been buying. We bought some in IT names. We bought one or two hotel stocks which were down like 30%. We thought it's a great idea to kind of, because hotel, we know that travel tourism is going to pick up. It's not going to go away. So we've kind of added that. We bought one insurance company. We bought one, we bought one manufacturing company, which is there in pharmaceutical space, outsourcing company. So I think across the board, we've looked at companies. So while we look at the stock, but eventually then we go back and sector, but go back to look at the individual risk reward of the particular company.
Hi, Vikas, am I audible?
Yes, yes,
Yeah.
Amol.
Just one quick question regarding current election results, basically, specifically, considering the mandate that we are seeing now, that aggressive reforms is unlikely to come through because of this. I mean, just unlikely because right now we don't know how it's going to be structured. But do you think that this can result into some kind of derating? And if the derating happens, then there will be a major negative sentiment um, across foreign investors as well. So, how do you think that scenario may pan out?
I think Amol, probably you joined the call late, but I think that is what all I covered in my entire call.
Oh,
That
yeah, I
and
joined a
I'll
bit
probably.
late. Yeah,
Yeah, so I'll just probably, so maybe you can listen the recording, but broadly, I
sure,
don't think, I think it's not going to change any major, even if you don't carry out the bold reforms, I think uh, the more of the same should be okay. And maybe, I mean, I don't want to repeat the whole thing. It will be 20, 30 minutes perspective I built. So I would encourage, we will put our call on the website.
sure,
So please,
sure,
recording of that, please go through that. Yeah.
no
I'll just
problem.
probably take few questions from the chat. How will government impact FDI into the country? Ability to attract technology and manufacturing facilities from global companies' views. I don't think it will change. Like I said, stability of the government is going to continue. It's not that government is not, it's still a government with reasonable, I mean, as a coalition, it is a majority government. So it's not that. So I don't think that will materially change. And like I said, don't forget that India is one of the biggest hope or biggest opportunities seen by all the countries globally. It is not only about the government, it is about the opportunity they are seeing. We are the young country, we are young market, we are the biggest market, so it is seen as an opportunity both from manufacturing as well as the market perspective. And I think it can only get better and bigger in times to come. And nothing is changing as far as I think, as far as my view is concerned. How are you playing consumer differently via alcohol, airline, or regular biscuits? Can you give some name or two? I think so. I can only say we bought Dabur. which has been, we bought one company in travel space. We are still buying, so I will promise to remember the name. But Babur is something we bought. We bought one more, consumer staple companies. We bought, like I said, we bought a hotel company, which is again a consumption. So we bought mix of multiple companies. We have not bought alcohol company. And while its segment is good, but we've not bought that. So yeah, airlines also is interesting space. Indigo is the only company listed, is doing well. Could be looked at, though I think it's a little bit of valuation is aggressive, but I think still it will do well because it's a reasonably good company. View on PSU and
Hi,
defense. Sorry,
hi,
go
Vikas.
ahead.
I've got one question. Can I?
Yes, please, Mike. Go ahead.
Okay, thank you. So, Vikas, people who have put in their money into shift strategy, for example, the exact priorities of the government will come in after the government forms and the budget comes in. Having said that, the new money that we put as investors in Carnelian, will you then deploy that money, for example, in new sectors wherein a good investment thesis emerges, or will you keep on to the existing stocks in the portfolio that we have now?
Sure, Mike. So I think very clearly we don't think manufacturing is, we see a very decadal opportunity. We don't think, it's a very long opportunity. And we have said multiple times in our calls that I see like how IT was in mid 90s. So, today our manufacturing GDP is only $500-600 billion. And we see this going to almost close to 7.5-8 trillion dollars in next 20 years. So that's the kind of opportunity we are talking about. So, and I don't think even the same government coming back changes anything. The government priorities are not changing on manufacturing at all. And like for two reasons, a government wants to substitute imports, and secondly, China plus one is playing out. And thirdly, India's cost competitiveness is, better than, China on many counts. Of course, China has its own strength. So I think wherever we have advantage, we will continue to do well. So we will keep investing into, we are committed to the theme and we believe that there is an opportunity to do that. The day we see that manufacturing as an opportunity is structurally damaged, and over that time, either we will refund the money to investor or we will readjust with the approval of the investors. But till then, currently our view has not changed on that.
Okay, Mr. Khemani, I have a one more question on chemical because chemical may we are seeing Indian companies are struggling just because of a lot of anti-dumping, like dumping which is happening from the China level. Because I've heard just going through a report, there is so many bigger companies are being formed and they are being supplied, like the stuff getting supplied from China itself. This is the reason Indian companies are facing challenges. So I wanted some, like your thoughts on this chemical Indian
Chemicals, I
company.
think there are two kinds of chemicals. One is commodity chemical, other is a specialty chemical. We always believe that specialty chemical is far better and a bigger opportunity where India has some edge. And if you see, and that is where I think, we have bought companies where those specialty chemical companies have diversified customer base from different countries, and the dependency on one customer is not there. And all those customers are looking to diversify away the supply chain away from China. So that is not dependent on some of the factors you mentioned, whether it is anti-dumping duty or dumping by China. That can happen only in the commodities chemical. And hence we have always avoided commodity chemical and will continue to avoid those chemical companies. And we found, this reward of chemicals is very good. In last 6 months, I mean, we sold most of our chemical in January, early 22. We bought it in 2020. And when we saw excessive got built, we sold. And in last 6 months, we bought back some of the names, new names, and some of the existing names we used to own. So, when an opportunity is very long term, within that also you will find some intermittent cycles. So while we will attend to that, we'll try to attend to that if we understand that. And that is what we have done in chemicals. I'll just take few questions from the chat. I think my view on defense and PSU I already said. Fiscal deficit, I think there's a question which I've already I think addressed. Uh, Are you saying a major change in the consumer sector? Consumer sector, I think, will do very well if you ask me over next, if you take a very long-term view. The challenge in historically in the consumer has been because it was always available expensive, because most people were hiding in consumption, which to some extent has got corrected. So, we are looking at some companies, especially where there's a premiumization theme as well, because today premium consumption is doing pretty well. So both consumer staple as well as discretionary as well as non-discretionary, you can find interesting ideas, and we've been kind of looking to do that. But premiumization is a very big theme. one should look at whenever one gets idea. There's a question, uh, what changes you will be doing in mega trends and mega sectors focusing till now? Like I said, we don't see any major change in India story. Mega segments, mega trends will continue as we outlined in the past. India demography is not changing. India manufacturing is not changing. India infrastructure focus is not changing. So I don't think any mega trends is changing in that way. Uh, Salil, what do you expect now with the new budget? Any expectation of tax changes? I think the only comfort probably we can draw from this is that capital gains, there was a lot of noise around capital gains tweaking around. I would assume that they would not change, but I have no special insights. I would only expect that if they should reduce some of the tax on the fixed income, because that will also kind of correct the imbalances which is there in the current banking deposit system. But let's see what comes out.
Hello, Vikas sir.
Yeah. Yeah,
Sir,
Darshan.
what's your view on small cap and micro caps from your own?
I think it's no different. I think, never buy company which are frothy, which are excessive. You should buy companies within small and mid cap also where the growth is there. Where is so we look at that small and mid cap is a very, very, very good segment. In any structural bull market, small and mid cap does better than large cap. We all know that. The only thing you got to manage your risk in small and mid cap, lots of risks are there, especially, in a bull market, every company positions themselves as one of the best companies, especially with a lot of moat and a lot of advantage. But we realize that when, and the valuations go past the reasonable level. So those are the things to be avoided. But otherwise, we like small and mid cap. I see no reason. Future winners will come out of the small and mid cap. Like to give you an idea, in 2001, then more than $1 billion market cap companies were only 20. Today we have almost 512 companies. So it is those small companies only become large cap company. We had only two companies more than $10 billion market cap in 2001. Today we have 86 companies, or maybe a little bit more now. So I think, so it changes, so future winners come from small and mid cap only. There's no doubt on that. So we like that segment. It's just that you got to manage your risk really well.
Thank you.
Where do you see markets web post 2021's Modi's third term ends? I think that's probably a little far-fetched. I don't want to either hazard a guess what will happen in 2029. Right now we are in that 24. I think let's play this. I mean, I'm structurally very bullish on India, but I don't want to hazard a guess what will happen in 5 years from here.
Hi, Mr. Vikas.
Yeah.
Yeah, can I ask a question?
Yes, Ji.
Just wanted to know, is there any material change in your portfolio strategy
Not
in
really.
terms
I
of
would say I wouldn't call it material. I have given you all the updates which we have made in our portfolio changes, but we are not doing any material change.
okay, thanks.
Hello.
Yeah. Yes, Amir.
Yeah. When you say we invest for a long term view, so we normally have a long term view only. Then why 2029 we can't give any view for 2029? For the last question I'm asking.
I mean, I don't have. The question was, what do you think Modi era ends in 29 and what will happen? I have no idea. I
No,
mean,
no,
I
no,
know
no,
that.
no, 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 not of Modi era, but in 2029 also, uh, view on the market from 5 years down the line when we do long term investment. So
So
do
I
we
have
have
no
a view
doubt
for
on that.
2029?
Got it. So India will compound. I don't know whether what will happen in 2029. India will compound between, I mean, Indian market should compound between 14 to 16% range for next 10 years. I have said this that, by 2035, probably my estimate is that Nifty should be in and around 90,000 to 1 lakh, right? And, that is 12 years, 11, 12 years time, right? So that's quite possible, right? And that is as long term as whether 20, I'm giving even 35, I forget 29. But what will
Okay.
happen precisely in 29, I don't know. But journey of the wealth creation, we are in one of the best wealth creation cycle in India. That I have no doubt. And that has not got changed anything with this event, is my view.
Okay. Thank you so much.
I will take a
Yeah,
question
Vikas
from
sir.
Ruchi.
Hi, Mr.
I will
Sir,
first take a question from Ruchi Sankhe, which is what would you advise clients to invest today? I would say, Ruchi, if this is long-term money, I have no problem. Please continue to invest. I don't see, like I said, deep correction in the market coming through. However, if some changes happen in the budget, we might see some volatility. Markets possibly have volatility, but I don't see major change in the overall investment thesis of the country.
Hi, Vikas sir.
Yeah, Abhishek.
Sir, thank you for the session and insight. One thing I wanted to understand, like you said, in the shift strategy, it's mainly focused on the manufacturing and
Abhishek, your voice is breaking, so maybe you'll have to be back from better line.
I'm in technology somewhere. BFSI or consumer, as you mentioned, that is huge growth you actually. Thank you.
I couldn't get your question, so maybe you can put on the chat. Your voice was breaking.
Yeah,
I
Mr.
probably
Vikas, this Saikat this side.
yes, I get that.
Knowing the valuation of India is overvalued and compared to China, which one is better investment horizon or
I
at
don't think
present
India is
point of
overvalued. I don't think India is overvalued. I
compared to
think it's a
China? If I compare to
no,
China,
but
so
both are
China
not
is a good
comparable.
option to.
I don't think China is a good option. I mean, there could be short-term trade in China because a lot of people are saying it's cheaper and but thing is, in my opinion, nobody understands China. Of course, so both markets are not comparable. China in last 20 years has given zero return, and I can tell you last 5 7 years, multiple times people have got this fancy of investing into China and burnt their fingers. My point is that India is one of the best markets happening, and by the way. In last 20 years, India has delivered in dollar terms best return across all markets, including US. So I always say that when you have one of the best market at your doorstep, why would should you sort of go and look at somewhere else? I don't think India is expensive, and I will let me again build on an interesting perspective. Uh, there are three things which go in Indian in valuation of any asset class: yield, interest, growth in the yield, and discounting rate. Yield is ROE, earning growth, and discounting rate. Our ROE at 15 16% is best in the world. Our earning growth between 15 to 18% is again best in the world. Our discounting rate is coming down. Discounting rate is a function of risk-free rate and risk premium. Our risk-free rate is lowest in, as compared to our historical time. The difference between 10-year US and 10-year India is only 1.5%. So our cost of capital has come down, discounting rates have come down, and risk premiums are coming down. So a 2% drop in the discounting factor, everything else remaining same, changes the equity valuation by 35%. So, it is wrong to compare with the historical times and say that historically it was 18p, hence at 20p or 22p it is expensive. Because a lot of things have changed and hence it is supposed to be expensive. It will be expensive. It's like this, in a city, development has happened, but we want real estate to be the same price. It won't happen, right? Same thing applies to any asset class, including equities. I just
Hello, Vikas.
finally have a few look at the what's your suggestion of equity or real estate over the next few years? I think equity versus real estate is so there are only two asset classes which beat inflation consistently for a long period of time, which is equity and real estate. So to that extent, I think real estate also is an attractive asset class, but only thing problem in the real estate is the illiquidity, ability to manage those things. So I mean, in real estate, I like only two things: yield-based real estate and sort of land. So if you have capability of that, you can look at that. But I mean, I am a big fan of equities and asset class because it's very easy, tax efficient, easy to operate, easy to understand. So, but I mean, I wouldn't say real estate is a bad asset class per se. Uh, I think I've covered pretty much most of the questions. I would strongly avoid lots of, there are lots of questions stock specific. If I go into that, probably I'll be doing this call for next half an hour or 45 minutes. So I would not avoid, I mean, I would avoid to give, stock specific answers. But if there's any final question, I think somebody just tried to ask question. I'm happy to take a final question.
Hello, Vikas sir.
Yes, Ramsu.
Yeah, Mr. Anand. Yeah, sir. My question is regarding your outlook on the current interest rates and the upcoming RBI monetary policy. And will the RBI have to reduce the interest rate in order to trigger the manufacturing and capex boom in India that you are expecting currently over the next decade?
So I don't think we are seeing it anytime in a hurry interest rates drop. I think, like I said, India's interest rates is anyway one of the lowest if you compare with the US. So, if US is not decreasing the interest rate, India cannot. It's very hard, right? And secondly, also, despite for the question somebody asked earlier, Nidhi had asked, I think that deposits are in short supply. So today banks are raising this. RBI is not raising interest rates, but banks are raising because there's more need of the capital. So I don't think there's any case tomorrow even RBI reduces the interest rates. Effectively on the ground it will reduce because there's more demand of the capital than supply. So it's again the function of demand and supply, and I'm sure RBI will be cognizant of that, and hence they will not reduce the interest rates. But today, I don't think our current cost of capital, like I said, we are one of the lowest as compared to our historical time, is a big hindrance from any viability of any project. So I would say we are all right in that, and our capex cycle will continue. Yes, Rahul.
Hi, Vikas. So thank you for
Hi there.
hearing my question out. Very quick question. So, a couple of days ago, NHAI increased tolls across the country. And I think just before Monday also, Amul increased its cost of milk. So, do you think there will be, given that elections are now behind us, there will be these cost-related increases now creeping into the broader economy across industries? And do you think that the markets kind of price that in, or are yet to happen? Thanks.
Rahul, this toll increasing is probably, I would say, while it would have made a headline, but by the way, it is inbuilt in every toll 5% escalation after a period of time. I think the toll escalation is a part of the normal, any NHI toll contract, and we've been seeing every toll goes up, with the, timely. Now some are 2.5%, 3%, some are 5%. So it's just a part of that. I don't think there was anything out of ordinary which was done. Uh, Milk prices and all, I think, are again probably they just coincide with the election, but I don't think it has anything to do with that. Amul does that periodically, again, depending on the demand and supply. Uh, Especially it goes up in the summer season, as you know that in summer always there's a short production, or the production of the milk goes down, and as a result of that, price always goes up, and in winter it comes down. So it's a normal, I would say, cost escalation, and plus couple of rupees every year anyway. Milk prices go up, part of normal
So this is
inflation
not
cycle.
like a precursor to a broader
I don't
input
think
cost
so.
increase. No,
I
thanks. That's
don't think
just
so.
something that I saw that thought I'll pass. Thank you.
I don't think anything structural changing now. I think probably, we've kind of taken pretty much most of the questions, but and I think we are just probably around, our time limit as also we have taken a lot of time from you. So I thank you very much for joining us today at a short notice. And I know we had a capacity of 500 and it's got fully filled. So some of you could not join, but I apologize for that. But thank you very much for joining this call, and please feel free to reach out to us if there are any more questions. Thank you.